What is up? Audio check. We are back. Yeah, what's up? 5 likes. Come on, guys. We need a little bit more for all the work that we put in. But, you know, it's all good. Appreciate you guys. Dude, was anybody in the chat that was here or that was in we did this meetup this weekend on Saturday night? Oh my God. This is how I know I'm getting older, is that there were tables and stuff, and I think a lot of people got to sit. I didn't sit for like 1 minute the entire time, and my feet, like, I don't remember having to take a full day to recoup, but geez, it hit me the following day. Plus, I had me and my buddy Ryan were there, and by the way, amazing meeting so many people over the weekend. It was just it was way cool. I wish I had pictures, so we'll need more pictures. I don't have pictures. I know a lot of people got pictures. I'm hungover from Saturday. I mean, Sunday, I'll just tell you, Sunday was like brutal because we had this event, if you didn't know, started at 6 p.m. Saturday in LA, and it was scheduled to go to 12. I didn't get back to the room till like 2, maybe. And I had a flight initially scheduled to leave at 6:30 in the morning. I was like, no. So I changed that, but still, I had to leave by 7. So I'm like, dude, all of Sunday was just absolutely thrashed. Sure. Yeah, I'm a lot better today. And Saturday night, my voice was just like, it's always like the weekend for me is like the recoup time for my voice. But like when we have an event or something like that, it's just like, you don't get any recoup time. By Saturday night, it was like, and all of Sunday, it's like, I wonder if I'm even going to be able to talk. But yeah, we're good. I mean, there's going to be a lot more too. So I'm excited. I definitely am happy that I went. But anyways, if you guys are new to the show, or if anybody that we met over the weekend is here for the first time, welcome for sure. Make sure you give the video a like and subscribe to the channel. We do this every Monday around this time. It's specifically Monday for any new traders out there, because, you know, on my journey to becoming a trader, a lot of people do their weekly prep on Sunday. And what I've learned over the years is that if I do that, come Monday morning, it's like everything that I thought could potentially be a possible trade or setup, it's like either the targets I had on Sunday already hit Monday morning, and I'm like, you know, or the trade is invalidated. So I don't do that anymore. I'd rather spend the time with my family. I think it's much more, or, you know, friends and hang out with you guys, but much more productive use of time is not to do that, but actually specifically this moment right now. We usually get a little bit of a lull in the market right around the lunch hour every day. But this way we have a chance to let the market kind of do its initial knee-jerk reaction, and then the dust starts to settle literally right about now, and we can actually start to plan out the rest of the week. So that's why it's always Monday at the lunch hour, or like during the lull in the day. We are in a live market, but again, this is not like the time that you'd necessarily want to be trading anyways. So with that said, I'm going to go ahead and start. Need to do this on Sunday evening. No, Sunday evening, same thing. It just, you know, it never has ever worked for me. So trust me, I tried. Anyways, this is the situation. Here's my thumbnail. And where I am is that mostly this comes from last week. And, you know, the market is feeling kind of crappy. I still see a lot of posts like, are we near the lows for the year? Guys, first of all, the year is like 3 months in. So it's more likely that we've already hit the highs for the year, just FYI. But we'll see. And we keep doing it. The problem I have is that even if we get a bounce from a technical perspective, there is no way that bounce isn't seen as a lower high from a trader's point of view, regardless of the headlines, and it doesn't get sold into. So that's the caution that I have right now, and it's very real. And it's mostly on, here's what it is. It's mostly on ceasefire headlines and things like that would happen, where the wars ended would be a fake news, it would be a bull trap. For now, just simply stated, we can look at Meta and, we all know, maybe if you don't know, Meta and Google had a court ruling that basically makes them now liable for the social media posts. And it's like, that is a fundamental game changer for their business overall. And when you look at the chart for just a minute, there's a big difference between what the chart of Meta is doing right now and what the chart of the S&P 500 is doing. So Meta is what we would call like a flush. Like that is what you would consider capitulation. That is literally it. Something actually changed. But what we saw last week in the chart of Meta is just no buyers showing up at all. And it wasn't that there's no buyers showing up. If you looked at it and you think about it for just a minute, it's worse than no buyers showing up. It's like actively selling, active shorting, in addition to obviously no buyers, but it's active shorting. Like the bears are fully, let's say, offsides in that one. Not that it's going to bounce, but that you can look at it and say, oh, they're definitively selling, like actively selling this stock right now. And that is, I don't have any charts up. I just have the screen up. I'm just assuming that you just looking back. But when we see the S&P 500, the bigger issue that I have is that I'd rather see that type of personality in the price action on the S&P 500 to say, hey, look, we're very close to the lows. And I didn't. Like, what I will say that was different last week, especially towards the end of the week last week, was that for the last 2 years and absolutely since Liberation Day, every dip gets bought. It wasn't until I think Friday that I actively saw like, okay, that's not happening anymore. And that's a big personality change. So I think the beginnings are potentially there, but the way that it happened was that we had headlines coming out during the day, Friday, potential ceasefire stuff, Trump talking, and every good sentiment, whether it was an article or something he said on a speech, you did see it actively get sold off, but it wasn't like a complete drop. It was like a slow bleed. And when you see that kind of stuff, what that says to me is that, okay, well, people are already hedged, as in like, I just saw, well, maybe the war's not going to end today type of reaction. But when it doesn't like full on capitulate, the difference is that Meta, the market wasn't ready for it. And that's how you get that kind of capitulation low, or like that complete sell-off low. That's very different than what we see in the S&P 500 right now. The S&P 500 right now is actually just a very orderly grind lower, unfortunately, which means that a lot of people are ready for it. And so what this thumbnail is about is that I actually don't think that we can completely wash out at the S&P 500 level yet, unless the market gets caught completely off guard. And based on what we're seeing, I don't think the market can get caught off guard, because it looks like what I see is active hedges. I don't see active shorts. That's the difference. And if we bounce, that's what's going to make it dangerous from my perspective, is that if those shorts come off, people like start going big long, that's how the trap is set. And I just, that's my biggest concern right now, is that the trap gets set. Everybody thinks that it's all clear after this potential counter trend rally again. And in that moment, when you think it's all clear, that's when they get you. So that's my biggest concern. I do see the potential for that happening. It hasn't happened yet, but that is the concern. Like, yeah, also, the market's just not buying what Trump's saying anymore. The market's just not. Do you guys really not know what I'm talking about? All right, I'll show you guys. Let me pull up a chart, just so I'll pull up a side-by-side chart here. So side-by-side, I'm going to put Meta, and I'm going to put SPY here. We're going to go on let's go a 10-minute chart just from a day trading perspective. And we'll make it no lines at all here. This is orderly, like every little pop on the right-hand side of my screen. Every little pop gets kind of actively sold into. You can even see it because if you're day trading, then you definitely know. I do need a daily. To make sure my extended hours are on. It's throughout the day. You have these little pops on the S&P 500, and they actively kind of get slowly but surely sold off into. Little pop, sold off, but it's not like every time there's some buyers, but they do eventually get sold off into. And then I think this is Friday. And so this is the day I'm talking about where even on a smaller time frame, you little pop like this, which you really probably can't see here, gets actively sold into, but I'm no longer on Friday seeing the buyer step in. Whereas before this is like a Thursday, you see little buyers stepping in. Wednesday, more buyers stepping in. There's still some belief out there, buyers stepping in. That's different. And then when I look at what we saw Friday, it's just like, where are my buyers? Like little pop, sold, little pop, no buyers showing up until we get to the actual close. And then Meta is different. So we have this active breakdown here. This is Thursday. There's literally just nothing, like nothingness, huge sellers. These candles like this that are just giant, no buyers really, but I'm watching active shorts come in throughout the entire day. 2 days, really. And look at this. I mean, this is the same day, Friday. Again, active sellers. They're net short. I think maybe today you can get a little bit of bounce, but we'll see. It's very cautious there. But that's what I'm talking about. Like even right now, it's the same personality on SPY. We have a bounce, but once the market's open, it's like every bounce here slowly sold. Right now, okay, a little bit of buying, but where we are, whoever bought this morning, if we go lower, they're going to have their little, what we call stop loss, and it'll be like that. But until then, they're kind of just waiting. Anyways, I didn't want to get into the charts just yet because it's not time for that. But what we do want to do is, as we're planning the week, since we're not trying to actively trade, we're just going to plan what happened last week and kind of where we are. So we come into this week. If you guys didn't know, we already had a big, I think the U.S. actually drained about half of their strategic petroleum reserves. Good news is that inventories are already on the mend, even though we haven't had to yet. They're like really trying to refill this SPR as fast as possible. I don't think anybody's really talking about that, but it's been since they depleted it, and I'll show you guys the chart in a little bit. That actually is pretty good news. You can do that by finding, I use like something called trading economics. Previous week. here. And at Wednesday, we get the oil status report every Wednesday. Crude stocks change. So this is where we were. Then we depleted it, or just took about half out. And then 1, 2, 3, 4, we're on the 5th week now. Or was it Friday, this one? Yeah, maybe this was the one where we actually pulled out, like drained it, a lot of it. And we've been building ever since. On Friday, we actually get something called the rig count, Baker Hughes rig count. So this is good for the US. And every Friday, this is called the rig count, specifically to oil. And this is kind of like Trump's thing where he's been saying, drill, baby, drill. We're used to having a lot more oil rigs online. So like in the 500s, 480s up here. And we're actually at a pretty decent low. So I would expect, this is over the last 3 years. I mean, they've shut down a lot of the oil rigs. So we're not producing nearly as much oil as we could is how I'm reading this, right? That's just how I'm reading it, maybe how the market will read it. But from here on out, coming off the lows, and what we'll see on Fridays is that this rig count should start to, we would expect that to see that go a little bit higher. Total rig count incorporates a lot of other things too, but we have the ability to produce a lot more. So that strategic reserve thing, I think if we can continue to fill it, that would be ideal. That would be better. That's where we are. In the meantime, the oil prices are still probably the biggest concern from a macro perspective, regardless of geopolitical stuff. The war at this point, and this is kind of where that fake rally potential happens, is that I'm like, the market is expecting amazing earnings. We did come off the best earnings quarter that I've ever recorded. And coming into 2026, it was like, look, there's no reason for us to think otherwise until we have a lot of these things happening. So with oil staying this high for this long, you start to get these headlines, which is literally right now. And that is that central banks across the board globally are reassessing their interest rate policy because of rising oil prices. Now, Powell actually spoke this morning and said we can look past the oil prices in the near term, but not for too long. This is kind of what his warning was. But right now, we don't have to really take that into a massive account. I don't think the market's going to buy that, clearly. And the biggest issue is that if oil stays that high, that means that inflation goes higher, potentially, which is going to end up hitting the consumers and the businesses. And that's where that whole, spiral downwards comes from. And so if that's the underlying story that's being built of the market right now, that's what's giving us a lot of additional downward pressure. And quite frankly, this was the story that was happening before any geopolitical issues really happened. So it's tough. Some things are holding up today. The semis are rolling over. I posted a couple things on X about Micron and specifically the entire SMH index as a whole. To be completely honest with you, that was like the one thing that I added protection on was the semis coming out of last week, because that one had been holding up pretty well. If you're a big holder of NVIDIA, by the way, NVIDIA's been going sideways for 2 years. My guess is that options are pretty cheap on NVIDIA right now, since it's been very, very range bound. So it's probably not a horrible time to do some protective puts. But the issue is that if we do have peak, another amazing earnings, which in mid-April, we're going to get earnings season. And my gut is that we will have absolutely amazing earnings. The problem is that what happens once that earnings report hits, immediately the market goes into, well, how's the next earnings quarter going to look? And they're going to look at this moment right now that we're living through. And I can't say that in 2 quarters from now, the market's going to expect peak earnings. That's really the issue. So yes, we expect really good earnings this coming quarter, but for the next one, that's what's in question. I think that's what we're seeing across the board. Meanwhile, with Meta and Google getting hit from a legal perspective, those are the those are two of the four biggest spenders on the data center builds, which the market has not been questioning up until last week. If Google and Meta just have to deal with a lot of other things on their plate right now, maybe don't have as much capital to allocate towards the data center builds, with Microsoft coming down the lows, that whole situation is what would put something like a Micron realistically at risk. Not this like helium shenanigans, or like, not that that's not a thing, but or like this. I think it was like a recent article that was like republicized or mentioned recently that like, we don't need as much high performance, high bandwidth memory to do inference from an AI perspective. But again, semis were holding up pretty well until they weren't, which happened to be the turn last week. Also, we got a 2-year bond last week, which, if you didn't know, that was probably one of the worst prints I've seen in the 2-year. The 10-year also is also at like its highest peak since July. So both of these are going up. The issue is that the 2-year is going up faster than the 10-year. So nobody's really talking about this yet. If you've ever heard the term the yield curve is the 2-year. It's the distance between the 2-year yield and the 10-year yield. How far away are these two things? Like, is there a big discount to borrow longer? And as we were doing our rate cuts, that yield curve was reinverting or uninverting. But if the 2-year continues to go higher, go up faster yield than the 10-year, we will start to get these headlines about this, something called a reinversion of the yield curve, which is it's probably the most like regular bearish thing that you'll hear from the talking heads at CNBC. So that is a real concern. And I think, again, watch this 2-year yield and the 10-year yield. If the 2-year is higher than the 10-year, that's not what the market's going to like. They're gonna come out left and right. It's not there yet. It is flattening though. So we call that potentially reinverting. And then over the weekend, we get all these headlines about the geopolitical stuff that's just like, it's rough. It's rough. So this is setting up for a little bit more of the same, because we've been dealing with this for a few weeks. My concern is, once we get a good headline, which it will come, good headlines will come. That's the good news. When good headlines start to come, because we're kind of like peak bad right now, do the balances get actively sold off into? And so right now, that is exactly what we're seeing. I haven't looked at Meta just yet, but some of the stronger ones you just want to be really careful with, I think, is the point. My voice is so deep, dude. It was real bad. It was real bad over the weekend. So that's where we are from a sentiment perspective. So the point here is that, yes, we're grinding lower. The charts also say that we're going to grind lower. I'm not seeing this massive capitulation, but beware the bounces on specifically a headline. I think that if we do have one, that could probably take us through the week. But come Friday, we get my favorite data point, which is the non-farm payrolls. The good news, the even better news, is that after Friday, we'll have a whole nother set of levels to trade off of. And it's possible that after Friday, we can really see a larger counter trend rally. That's where I think we are. And as well, I think it was last week. Yeah, last week I talked about corporate buybacks, which are should start to begin mid-April. So April, first Friday of the month, we should get non-farm payrolls. Is it Good Friday? Friday is Good Friday. Yeah, so that's what I was thinking. It's like, we might not actually get it. I think it's scheduled for Friday, but it's Good Friday. We do have the window reopening for corporate buybacks. We know that a lot of people are going to start buying back. A lot of companies are going to be buying back some of their shares, especially at these discounted prices. I mean, these prices are getting pretty cheap. Like there's no denying that these prices are getting cheap. And you'll see this, here's another slide, the market climbs the wall of worry kind of slides. This is really old. I think if you've had a long-term view for a while, and you're a long-term investor, honestly, like these areas are good for multiple years out, as long as you don't need the money right now, and as long as this is not where we are. I was looking for my seasonality chart. As long as you have an expectation that, look, I'm not gonna sell this stuff, and it can go lower, but it doesn't really have to. There it is. This is the one I'm looking for. It can historically go lower, right? And so we're actually now going to be here. Seasonality has been also off a little bit, but year 2, year 3, into year 4 from now, all of these dips, the deeper they get, the better they start looking. But the ones that haven't dipped, look, they still have this drop to go. And I think that's specifically SMH, the sector that I'm mostly concerned about right now. So we'll see. And as we get into Mag 7 earnings, if any of those companies say that they're not going to be able to spend as much, that's the worry. We're not there yet, but the market is reacting on the possibility right now that they might say that. So call the market's bluff. We'll see. But again, once we get into earnings season, that's what could really, between earnings season and non-farm payrolls, those are the two things, plus corporate buybacks opening. Those are the two things that could produce a bounce. But for right now, we're trending lower. That's unfortunately what is true. One other thing, let me just do this. CBOE FedWatch. So we had the FedWatch tool, CBOE FedWatch here. Come on, Legoogs. We were coming out of the year, not like that, wrong slide, like this. So this was earlier in the year. We had two rate cuts priced in. This is what's changing. We got pretty bad for a little bit, but actually, and these are old slides. So this is actually last week. Right now, when I go into this, and I looked at it this morning, it was a little bit better. So a little bit better here, which could be setting up that small counter trend rally. I know it doesn't feel like it, but I'm just saying I think it's possible. And the index exposure, this is NAAIM Exposure Index. Last week, we were actually 60. And this is one I've been starting to watch a little bit more, because this is it's not a sentiment gauge or a survey. It's not a questionnaire. It's like they're actually measuring who's exposed and who's not. We went down to 60. To me, we have to be below 60 to bottom. And then this comes out every Thursday. Last Thursday, we actually saw a little bit of exposure jump up. So these things kind of combined where the rate expectation changes slightly. It was pretty bad a couple weeks ago and last week. And looking at the exposure index here, kind of both going up, it's possible that we have this counter trend bounce brewing underneath us. So very cautious to continue to short, especially things that are like very low, but that's where we are. I'm not going to do this yet. Let me see. Before we go into that, I did want to check earnings, and you know what I can do? I wanted to go and check on our buddy. Where's my Twitter? We'll just go on Twitter and get a Catalyst watch. And then I did get a reading from our friend Miss Cleo, who does this horoscope, not horoscope, but what would you call it? My friend Miss Cleo does the actual astrology for men, not me, but we'll take a look at what she sees. So if you're not following Evan, by the way, Evan, here's his post. This is an amazing post. Every week that he does, it's kind of like the Catalyst watch. Some things that will show up on this are not on the economic calendar. So we'll take a look. The economic calendar is going to be here. Are we getting a bounce? Did it get sold? This is what I want to watch. As if you're watching markets live, I want to see a couple bounces. Like, I don't want to see the bounce instantly get sold into. I just see people hedging. I see that as people putting on their hedge. It's putting on a hedge is very different than people getting short. That's my bigger concern. You can see that in gold too. Like when gold was building, it's like people weren't net long yet. They were just like not really long, at least. It could get worse. But anyways, so here's the Catalyst Watch plus the economic calendar for the week. I should start giving Evan this link again. So earnings, I think Fermi already reported. That one's down a bit. That wasn't probably the most popular IPO the year. We have dividends coming from Micron, which just paid. Again, another catalyst to kind of like, why am I going to hold it? I already got my dividend. They could start selling it all. We'll take a look at that chart later on. I'll give you guys my thoughts and where I was coming into it. IPOs is probably a rough market. So, but these are some IPOs coming in. 4-day World Vaccine Congress begins today. Merck, Tonix, and Valneva. Where's Pfizer? I would have thought that Pfizer would have been on there. So Pfizer's actually up today. Some of these old safety stocks are doing okay. Like Pfizer's actually doing good this year. Probably a rotation into. And as we bottom, that's the kind of stuff that I want to look at too. So like as we bottom, something like Pfizer or Merck might not be super strong right now, but they're relatively strong compared to the broad sectors. And let's say those stocks go down, those are going to be the ones to watch coming out of the lows. If they continue to have relative strength coming out of the lows as we get there, those will end up being your better buys. Just like software didn't fall nearly as much in the pandemic, and software was also the first sector to recover back then. So watch that as we get out of this, really. Jay Powell already did his thing today. I didn't hear anything notable coming out of that. 1st of April. What happens 1st of April? Oh, I'm trying to catch up. Yeah, no, ES has not taken the initial balance lows. And I did post it. So if you're trying to actively trade, check out my timeline. I posted the levels for today already before we opened. Earnings on watch. Look, Nike, absolute poop show of a stock right now. I wanted to like Nike. I really do, but it's just not happening. Coke, nothing major. Implies a 9% post-earnings update from management in China. Okay, so this is a pairs trade potential. So they have a lot of tariff issues and things like that, but their update could affect something like a Starbucks, Skechers, On Holdings, things like that. Wednesday, Calm Foods, geez. Data, here's where Tesla is. So we get EV deliveries on Wednesday. Big catalyst for those. Some of these, I don't think the market's expecting good delivery numbers from a lot of these companies, but if they do have good delivery numbers, that will catch the market probably off sides and be it one catalyst to do good for these stocks to actually pop quite a bit, because a lot of these are down as well. Apple, what is this? I want to say Apple looks relatively strong, but I haven't looked at it yet. 50th anniversary. Oh, look. Celebrating a milestone, global events, and a message reflecting its history. I don't know. Foldable phone supposedly coming this year. Aptiv, no, we're not going to do that. Retail sales reports from the calendar. Federal Reserve, not a big deal. Thursday, not really any earnings coming. Booking Holdings. Oh, Booking Holdings doing a split, 25-1. Fine. That stock needed a split a long time ago. Black Hills, And then Fridays, we're closed on Friday. Look at that. We are closed on Friday. Confirmed. Closed Friday for Good Friday. Good. I have a lot of stuff to catch up on, so I could use a break, man. 3-day weekend, Good Friday. I wonder if that begins the rally. That could begin the rally. We'll see. We'll see. Here's earnings. I think I had a little bit different. This March 29th. Yeah. USAR today. Let's see how they do. How did they do? This is a rare earth one. Nope. They didn't like it. That's all right. USR. Yeah, nothing major happening. Some of these, like, these are not safety stock, ConAgra. That's more like a discretionary. We talked about Nike, restoration hardware stuff, but that's more or less what we have, I think, for the week. And then the actual set. So we're going to be closed for Friday, non-farm payroll day. It's on the calendar. Does anybody know if we're actually going to get this while we're closed or not? It'd be wild to get. I don't think they could release it while we're closed, but it's possible. We'll see. If we don't actually get, we're not going to be trading when we have the scheduled release. So probably not. But anyways, that's where we are. I'll get in the charts in just a second. But the one I did want to do, we always talk about this. So I did get a reading this week from my friend, Miss Cleo. So we'll take a look at that. It's kind of crazy. Did she nail it last week? I think Miss Cleo nailed it last week. So I don't trade off this stuff, but we're going to get a tarot reading. We'll see how we do the week. And I'm curious. I'm always curious to see how it matches up with what my charts are going to tell me. But let's get on with the show. So close your eyes if you're not into this. But if you like it, I know a lot of people do. The wildest stuff ever. But let's see what she has to say. All right. So this is what happens. My friend, we call her Miss Cleo. It's not actually her name, but you can look up Miss Cleo. It's funny. My friend gives us this reading. This is the legitimate astrology for the week, every week. I mean, yeah, it's funny, man. But it's wild to see. And she actually does pretty good sometimes, which blows my mind. I'm like, how is this happening right now? But the way this works is that we get a theme card for the week, every week. King of Swords. I have no idea what this stuff means, so I can't really read it. Today, what is that? A 10 of coins. I mean, this is not a good looking card for sure, whatever that is. That's a real ugly card. Tomorrow's card is, I think that was last week's theme card, right? So maybe, I don't know. It's like the 10 of swords, a guy's laying in his pool of blood. I don't know. That might be the low. At this rate, tomorrow could be the low for the week. I'll give you my exact level. This is hilarious. And then we get what is this? Cups. Looks like 8 cups. And then we're walking away. So we meet up. We look like we have a little bit of a party. Oh, maybe we were at a party and we were stabbed in the back at the party. And then we walk away from the party. That's what this looks like, with less than we had before, because we had 10, and now we have 8 with a little bit less. But then the king comes on Thursday. I don't know what he does. He's got a little lizard down here. And then the Hierophant. Zero clue, but maybe somebody's telling us of what's to come. I don't know. Maybe somebody should tell Miss Cleo also that we are closed on Friday. So potentially the Hierophant doesn't come. I don't know. So, but she gives us a reading because I have no idea how this works. I can't. This is how it works. She gives us the reading. I always like to check it out. So the theme card is the King of Swords. We thought that the Ten of Swords, last week would stick a fork in the market, and it did. However, we also hoped that it would be the end of it. The follow-up with a King of the same suit says otherwise. Oh, she's just calling for more. All right. However, the energy should be lower overall, which means it'll be tougher to chase any downside that appears. I would agree with that. Swords tend to cut both sides, so it could be the bottoming action that the bulls are. See, she's already kind of in line with what I've been thinking, which is wild, right? And we don't talk. we don't actually talk Trump Taco Thursday, but we'll see. Monday, there's a lot of prediction bets out on the Trump Taco, like couple days. This is the first back-to-back tens here, suggesting 2 back-to-back culmination events. There's a possibility of a complete and total reversal of Friday's price. We did get that to open, kind of, not total. This requires that prices stay healthy overnight, which they did not. Otherwise, it's a bottoming event that chops near the lows and sets up to a buy the dip period. I mean, she's already kind of thinking that, look, I kind of feel like maybe Miss Cleo's actually decent at TA because I'll have an idea of what this is going to look like. And then I read these cards and it's like, Tuesday, 10 of Swords, look for a medium to strong trend day. The highest probability being opposite of Monday. So maybe the bears get stabbed in the back tomorrow because today trend is down. I'll just say that. However, 10 to 10 can be can be weird. Just chase price instead of trying to get cute with mean reversion. We have this saying in TA called Turnaround Tuesday. Sometimes, and this is why, sometimes Tuesday we turn around completely. It's, again, Monday, not that important, especially in the morning. Wednesday, 8 of Cups, 10, 10, 8 says back to where we came from. This is perfect if Monday is red and Tuesday is green, at least for the bulls. This card in particular suggests a changing of pattern after abandoning an earlier goal. The card suggests a changing of pattern after abandoning an earlier goal. Okay, this can be handy. This can be a handy transition or pivot card, especially on Wednesday. Chop is the play if this occurs. So flatten on Wednesday. If mean reversion appears, then look for a medium to strong trend, during which time you can chase momentum. Thursday is the King of Wands. We can expect more strong energy here. Oh, this is setting up to read like a day trader's like paradise and a swing trader's nightmare, really, if it's all counter trend bout and with a mean bout of whipsaw in the process. Yeah, day traders. The probabilities suggest continuation with energy higher or greater that of yesterday. I think that's what that means. This card trends less than 0.5%, more than 60% of the time. Confusing way of saying that you can probably chase momentum here. Yeah, you just confused the crap out of me, Miss Cleo, too. We closed the week on the theme of structure and tradition. She forgot that we're closed on Friday. Look for formal system to take over here. This could be news from a prominent figure, an explosion of big money cash flow. I hear it. Or return of natural price movement and liquidity fills. Green is very likely. The worst case for bulls is probably negative chop. Unfortunately, we're closed on Friday, Miss Cleo. So that would have been nice to get that card on Thursday. But if this beautiful day does not arrive, I don't know, maybe is the bond market open Friday? Maybe it happens in the bond market, so we'll have to watch. Tick max selling now. Yeah. That's Tick is a market internal, probably an apprentice student right there, or at least someone that follows. Recap. Big energy in play this week, and while the path is less murky than before, there are also more hazards than we find on a normal week. Be ready for back and forth and try not to fade big moves. That's the reading. It's what she says. I don't know. What do you guys think? TBD. So here's how this works. So I've been trading for a while. My first look every day is I like to use a 30-minute time frame chart. I'll just tell you that. And it gives me a pretty solid view across the board. I'm going to make this a little bit bigger for you. Looks like we're selling towards the lows right now. And I use these things called NFP levels. So I'm just cleaning these up just a little bit. Right now, we have essentially all four major indices trending in the same direction. That is SPY here, QQQ, DIA for the diamonds or industrials, and the small caps, Russell 2000 ETF. This small cap index has been the weirdest one to me. It's actually not broken down. I feel like that would be the next index to really crack, especially if the market decides that we're maybe actually getting rate hikes. This index, this IWN index, should not be relatively that strong. So that one, I feel like if you're, let me look at this. Oh yeah. This is coming down. If you're looking for, let's say, a short that's not the S&P and you want to do a broad hedge, what is the 3x inverse TZA? Yeah, so 3x inverse small cap index. Yeah, this guy's not broken out yet. This would be a hedge equity position. Perfect example. Like this is where this is coming from when small caps are down. Also, the January effect is over. So for both of those reasons, I don't hate that as a hedge. Going short the index IWM. This is not going to look good here. Anyways, that's happening. So if you own, what is the bull case or IWM? That's probably a protective hedge right there coming into this non-farm payroll number. Also the dollar back over 100. We have some, what we would call like a bearish to bullish reversal happening here on the dollar index. If you don't know how to chart and you don't look at these things, what I could say here is that with no lines on this at all, generally speaking, if you look at, even if this was a line chart, there's what's the easiest way? Bulls, like a bowl. If this was a bowl, so you see a bowl, this is a bullish setup like this. Any like rounding bottoms, this is a bearish to bullish reversal. And what are we going to call umbrellas? Or bearish. So what's an umbrella? So SPY is an umbrella. Bulls are bullish, bull. And umbrellas are bearish. So you have like this umbrella. It's the easy way. Usually bearish. Super simple. That actually works. If the dollar goes up, though, it's more concerning because this represents like a literal flight to cash, not even bonds necessarily, but the dollars that we buy things in become worth more, which means that even if nothing changes from a company perspective, the very, very short-term, very myopic view in the market is that, well, even if nothing changes, the value of the dollar has stayed the same, but the value of my asset that I'm buying in dollars has not changed. That therefore it takes less dollars to buy the same asset, and that in the near term becomes not a bull case for stocks. So we're seeing a little bit of that right now. I'll give you the targets for the S&P 500 right now. So this, first of all, we know that January and February NFP levels hold true. This was our breakdown right here, 669. We have two levels of resistance overhead. This is the March NFP number. So when we get April's, or when we get the next one that releases, just so you know, This will update it or indicate. This is my indicator. It will update so that you'll have the accurate one. That's automatic. So just make sure that you update it on your ends. Because I think the default is set to be the first Friday of every month, unless otherwise noted. But there's only 2 that I'm doing. What you should know is that all levels always persist, meaning that they're always in effect. And so the bigger issue is there is a November. So this was last November's NFP level. And you'll hear the market like talking heads talking about November and September levels. This is November's range of 2025. September's range of 2025 started just below here to here. And my post this morning actually mentioned whatever it was 643.33. So 643.33 is in fact overhead resistance. If we get a close over that this week, that actually means I would say that the downside move is done at this point. I think that we're done going down if we get open and close over 643. So it's not too far away. In the meantime, last time we spoke, my gut was that, hey, look, we can be as low as 620s to the downside. That is the downside support. But even if we hit 628 down here today, I think that would be the max low right now. We're not going below that. So this is your floor today. As long as we open above 628, we're not going to go lower than that at the index level. And realistically, this is what I'm talking about for a potential bounce higher. We're not going below this, right? I'm just full confidence, whatever, today. Tomorrow, though, is if we end up opening below the 628, 626 area, that's my bigger concern. And so the way that this sets up is like, we could do this and then turn into a counter trend bounce just like this. But when we get here, I will also say it's very likely that we do get here right now. If we don't start opening below that, meaning like we don't have even further continuation, which by the way would be kind of wild. If we don't, then that's probably going to be the lows for right now. So that's where I'm at. So the levels are 628 right in here, 628 to 622, 628 to 626 right in here, this area. As long as we're opening and closing above this area, I'm good. I think that would be the floor right now. And if so, that sets up from there, not from here, from there, the counter trend bounce, which would look possibly pretty violent, at least into this area. And then we're just going to go step by step. It becomes over 643. You have these potential levels to go. Follow me. I'll keep you posted on X. And these are all potential counter trend bounces. My one concern is that if this happens, 670 is the massive overhead resistance. If this happens around this area, I'll let this go. You can trade this long. If this happens and we stop right here, take measures. Your long is probably over, and we get more cautious than optimistic, for sure. And this is what that counter trend bounce could and would look like if this happens. But I can't anticipate that until we're here, which might be tomorrow. So tomorrow, if we open up, let's say 629, your boy's probably going to be long. Or at least covering a lot of shorts. But if we can't hold this level, if we can't hold this 627 general order, I'm going to call this an order block right here. Right now, this is support, general support, not massive support, but it is the next support level. If we can't hold that and we get something like this red line, shorts go pretty much immediately back on. at least for another 10 points. And then the next order block is here. The problem we have right now is that, look, we are trending down. That's just what's true. This is the next level. When we get there, that's when I seriously watch. And I'm going to be looking for one of those little bulls. However it turns out, I'll be looking for a bull, a very short-term bull. And if I get my bull, right, I'm gonna grab me a cup of coffee or something, and we'll probably take a ride for a bounce. Short-lived bounce. If you're super long, just be aware that right now we're still going down. And if we do get a bounce, you're lucky, but this is where we want to watch out for. And then we'll play it by ear as we go. But right now, yeah, here, intraday, this is a 15-minute chart. We have a session gap from over the weekend. I think we're just about there. Almost there. Oh, yeah, that's there. So this is what we would call a session gap, literally right here, right now, where pre-market opened up higher than post-market levels, and we just filled this little inefficiency in the market. So if we're trading below this tomorrow intraday, we still have some more downside to go. Otherwise, this is generally the area. Right now, these candles are getting bigger, man. I almost sold I wanted to sell, so I had an idea to sell some 630 puts last week. Kind of glad I didn't. I think the first move I will do is, if I do see this kind of bounce like this, is probably sell some like 620 puts. I'd be selling some puts for this area because we could bounce around a little bit, but I'll probably end up selling some 620, maybe some 610 puts, because that's going to basically be this entire range here, which would be the next lower level of support. But it's so wild. Like right now, it's just like, dude, it's not. We're the buyers, guys. We're the buyers. I mean, currently right now. 629 could be today. It could be. We're halfway through the day. This number, this 633, the way TA works, it's very if this, then that, right? And so simply stated, if we're below 633.13, this session gap, then that is that. No question in my mind. If we're below 633.13, then we are, without a question, going to 628.20. It just is what it is. But now you guys know. Also, I don't really need to buy this. Like, there's no reason to step in right now. I'm looking all across the board. This is getting ugly. Q's is likely the one that's more at risk. This one had not gotten nearly the recovery that SPY did. Again, just because of, the equal weighted index, RSP holding out so strong. That's still the biggest issue. Looks like, yeah, so we opened below. September's range is here. Yeah, that was not happening. Geez, are you already at this first level? Q's already there. And the August range, yeah, the August range is to 550, and then you have a pretty heavy gap down here. So that's where the flush level would be, but 551, you got two spots on QQQ right now. You're about, yeah, so Q's, look at this, already below the session gap. If it holds below the session gap, yeah, that's what's happening. It is what it is. I don't need to fight it. What it is for QQQ, 557, 557. This is support area here on QQQ. This is even less downside. But my God. Can we just be the worst situation, man, that I hate to say is like the slow grinds when it just takes so much time. Like, I don't know if anybody traded in 2022 actively or something similar than that. The problem 2022 is that we got to the lows and then we went sideways for like 6 months. That's possible this year. I just, from a technical perspective. I'm not going to look at the others, but the two charts that are important right now, or have been and remain important, that I've been talking about like ad nauseum, are one, this RSP, which is the equal weighted S&P 500 index. My warning was that, look, this was the kind of like saving grace for SPY, or for the broad market. It had fallen out of the channel. This is not going lower. We know that IGV, the software index, was already getting decimated, demolished, although it was at support down here at 80, got a little bit of a counter trend bounce, but is now below its 200-week simple moving average and seemingly looking for lower. The next level here is 7180 on IGV. But the problem is that the market, it's not a problem. My sentiment and what I've been trying to say here is that if IGV and RSP are both going in the same direction, I'll just pull up that side by side again. That's our trend for all intensive purposes. Right now. What is it? And IGV plus RSP. RSP we know is going down. New trend has emerged. And if IGV continues here now, literally here now, we will have confluence that more downside is to come. So IGV software sectors at support. Microsoft looked good this morning until it didn't. Back at the lows. If IGV goes any lower and RSP just continues on, I mean, this is what it is. So then we would still have some more downside, and we would just see more slow grinding to go. But I will tell you guys, when I see something good in the charts, I don't have a reason to take any hedges off just yet. Oh, there goes SPY. Session gap fill. I mean, if I don't see them stepping in, then it is what it is. Now we may see total capitulation. I mean, it wasn't that big of a bounce. That's my problem. I think it was 2 weeks ago, I said we could have like 670. I've been talking about this for a while. 670 kind of counter trend bounce. We had the same thing Friday to Monday last week. Like the Monday bounce was like 666. What an ominous number. But it didn't even get to my 570 area up here. And it was just like actively sold again. I'm like, really? And this is the problem. Like, and this morning too, same, like the bounce doesn't even get to my level of resistance here, which means like when I see that, this means that like they're not waiting. The market's not waiting for it to get to my level. This morning when I put a post out on SPY, it was super similar too. It was like we have 643.33 overhead resistance. Pre-market, we're close, right? But when I see this this is pre-market high, PMH for pre-market high, they open up right here. And there's just no waiting. Like they're not, we call this opening range high. They're not even waiting to get to pre-market high, much less like the actual overhead resistance. They're front running this. This is weakness. And I'm like, ugh, not yet. Slow grind. But the grind slower, I think this week is less than what it was last week. We'll see. That's where I'm at. Less than, which sets up for if the selling stops at some point and we do get a headline, cool. We can have a little bit of bounce. But until then, very cautious. You got to be very cautious. All right, guys. So I'm gonna look at the chat now. If you want to take a look at any tickers, go ahead, drop them. as we go. Micron, I'd posted something on Micron. This is the first one I'll take a look at. But this is just me. If you're not following, follow. I'll just drop it in the chat. You can just click it. But this was the funniest thing. Like this is classic, what we call distribution. It's called distribution. It's a literal blueprint for how the market, how prices act at certain areas. And we're seeing a lot of this. This is not just Wyckoff. This is what SPY looked like before. This is what the SMH as an index looks like right now. Specifically, there's one that has like a fake out breakout, right? And so like you have the high and you have a low of kind of like your consolidation. Specifically, Micron had done like a little bit of a fake out, which is probably the most concerning piece. And here, there's this thing called last point of supply after you slightly breach near-term support. And that's literally, I think it was here, right? Any failure in here, and we know that this breakdown is happening. In here is what, like this area? This is 385, 384 to 372. It's basically where we were Friday up to 385. I don't know where we got this morning, but I know Micron was big green in the morning. It didn't even get there, dude. They're not even waiting. Was this like, it was an insta-sell. Looks like it was insta-sell. This is that same thing right here, breaking support, retest, failure, and then you have big, this is more capitulation on Micron, which begins to take the entire SMH down. So there are semis in the index. I own Mavell. I've hedged Mavell at the highs just recently. Let me go back. The semi index as a whole. Here, SMH. I don't like that all the charts look so bad, but this is at 385. It's already, again, the umbrellas are bearish, generally speaking. Like this isn't another umbrella. If you're not a chart person, you don't need to be, but that's an umbrella that usually starts, rain. Below the 20-day even. I mean, it's just that was the concern here at all. 300 is a technical retracement. Probably goes a little bit lower if it's a full blown breakdown. This is where we are right now on SMH. The index, it's clear as day now. Here's the same thing. There are some that like Mavell specifically. It was looking good, right? But I know that Mavell, look, I've had this Mavell for a while. As much as I want this to look good, if the index as a whole is not going to hold up, it doesn't matter. The Mavell is going to have a hard time, and it's not going to look good. So there's the hedge at the highs just recently. So if your stock is in a sector that the sector looks weak, probably a good time to maybe even take measures, possibly like a Palantir. This is going to, I think I did this last week with Amit, my buddy. Again, this is your umbrella, right? We have it. It's holding up. You break down. But here now, this was that breakdown area, 650s or 160 to 165 in here. It's getting rejected. So they're turning into sellers. The best bull case that you can hope for right now is that 135, 140 ends up being support and you retest it again. But if this breaks, that's a bigger problem below 130. If 130 breaks, then you're in a full, that's when capitulation begins on Palantir. If you're a Palantirian or whatever, I put out a couple thoughts on it of like how you can do it, but I have pretty much all my tech is hedged, like 100% hedged at this point. It could be a great company. It's a great company, but it could be a great company in a bad environment, and it's not going to matter, unfortunately. But I also don't want to be like fully invested at the highs and not able to, this is mostly the truth. I don't want to be fully invested at the highs and not have cash at the lows to buy the dip. So, you don't have to sell it, but just, if we're going to get a better price lower, first of all, this isn't going to be it. But whatever it is, I do want to be able to have a lot of cash available because, again, this year, did you guys know that in midterm election years, I wonder if I have it, midterm election years, I think, oh yeah, I do have this. Check this out. Midterm election years, they're horrible. But since the 1950s, here's bullish notes for you. You have a 12 massive midterm election year drawdowns. And if you bought the midterm election year blood, get this, it is a 100%, this is bullish, 100% positive 1 year forward return in large size. The average 36, the median 39. So my posts, I think, closing out the week was like, look, this could be another, I think best case scenario, it ends up being bigger than Liberation Day dip, but market is expecting it. Market is expecting this. The good news, the freaking amazing news is that if you buy midterm election year blood, 100% of the time, you have like a near 40% 1 year positive forward return. That's pretty good. So that's the good news. In MT cash outs for sure. And yeah, I've been absolutely saying this. It is not yet usually. It is usually October or September later on in the years. Okay, so I'm going to try and, okay, so I'm going to cut the requests at Fastly from Rip and Dip. So I'll get to that. But don't do any more requests. Let me get to the ones we got so far. All right, I did Palantir. Again, 140 is the best case scenario here. But what I will say is that in a market like this, when the market is just so clearly trending down, I do not expect support to hold. I now expect resistance to hold just like this. And I actually expect support to break until proven otherwise. And then that's different than what you've been seeing over the last 2 years. So my caution is that we don't want to buy dips anymore. In general, I want to wait for the bull. I want to wait for like a big bull to show up. So I'll let this go. And if I do get a bull like this, it's literally at that point there that I will take it, just to show you what that looks like. This was my most recent buy. And this is a big bull. Literally, I saw it as it was breaking here inside a little bull, believe it or not, inside like a weekly massive bull. You see it now? If I have all this back to back to back, cool, like we're good. But Palantir, well, you're already at 140. The low end of this consolidation is 130. But I do expect this to break. If you, best case scenario, it doesn't. You have a little bit of a session gap here, 136. So this is the top of that most recent, we'll call it session gap. And the support on this is going to be very near term, also very weak support, but support nonetheless, 136.90 down to 125. Very near term support, but support nonetheless. So That's Palantir. I don't know what this is. SEZL. If this is a small cap, which it is, defer to my sentiment on IWM. It could be a good small cap. First of all, seasonality on IWM is over. Its seasonality from here on IWM gets bearish in general. And I have, again, like the big rounded top, whatever this, our little umbrella is, like literally breaking now as we speak. So small caps as a whole, I would expect to be more at risk moving forward, especially if the data comes out bad on whenever we get it. But with oil this high, it's like it's not going to be fun. We're below 244 on this index, so regardless, be careful. This also looks very bearish. This actually looks like capitulation has not even started. So this has been holding this level since December. Is not broke down. Perfect example. I know nothing about this stock at all. So it could have complete fun. I love the PFP though. It's perfect. I know nothing about this stock, but just based on where it lives in the index, and then seeing this pretty extreme weakness as well, this is not a good look for this stock. You're likely gonna catch this low right here, which is like 57s. Your super recent but lower support is down here. This is just a range. This is just a trading range. So if it comes out of this range, this is a perfect example of a stock that is currently in a rest mode. It's resting. It hasn't really moved. I mean, it's a large percentage, but it hasn't moved out of its range. So it's lived in this box for a while. This is exactly that fake breakout up here that sets up a lower high to break these lows. And if this goes, it'll do this, but the move, it's going to be a small move like that. The move would be later if you get this rejection here around 56s. So for now, it's going to retest this area. Your line in the sand is 57.30. I think that's 57.30. Yeah. I need to not have the labels. Yeah. Your line in the sand is 57.30. So a breakdown confirmation would look like this. Breach 57.30 first, come back up, and then the second failure is where your actual move would typically end up. But you can use that across the board. ARM. So ARM Semi index, we just looked at SMH. I'm actively short ARM right now. This is a live trade for me. Yeah. So again, same thing. Good news, I know, but broadly speaking, this is like one of the biggest umbrellas out there that has not even begun, right? And so like this is my concern, is that if I see these things happening, here's the box of general consolidation. I mean, this gets. You've tried, or 3 times you've tried to break out. This one right here, this 164, when you look back, this is a high of that price right there. Literally right there, which happened so fast, I couldn't have caught that. But the point is that at this spot, after trying to do this, I just know, like, even though it could be good fundamental news, right now, price is not going to accept it. Which means that needs to go back to support. Here now, looks like you're going to be breaking down to the lows. Again, this is a short trade that you're seeing on my screen that has a first stop at 127 and a second stop down to 116, and then I'm done with the trade. That's what I see right now. So 127 in this area here. Basically, this is your support right there. I don't know if you were already short or short with me, but yeah, I'm not taking profit on this short like yet. Zscaler, these are tough, man. So like, I just not a believer that AI is going to take these guys out. There are companies that I can look at and be like, yeah, you're probably at risk. And I do believe that AI in general is probably going to create a lot more jobs. This has already happened. This is like Zscaler and CrowdStrike are like patient zeros for me. This here, 125.90 is actually longer term support. So this is an example of one where it's like, I don't want to short this at all. But again, because of where we are in the market, I also don't want to jump in long. At 125.90 down to this area here, this is serious support. You can see it here, 85. This is a big time support. What I would look for, so number one, you couldn't get me to short this, not happening. Even though it's going down, I think that's kind of done. In this area, like what I'll look for is, did that help? The bulls are bullish, umbrellas are bearish. I'll look for this kind of like bull to form, but like the hardest part here for anybody that's new to trading is that might take a while. Like it might take a long time to set up. So Zscaler, again, remember, like based on just this alone, this might be one that recovers first. If you're buying the stock, equity, not options, with at least a couple years time horizon, with money that you can plan to hold, with money that you don't need right now, have at it. And hopefully you get it lower, like lower. So this goes down to 80s, but it's not going to be ready to bounce or go back up until I see that like bottoming, the full blown bottoming formation begin, which means that it's probably going to be more like over 150. So you can nibble here as an investor, not a trader. And as it comes out of this over 150, much later on down the road, all right, we're probably good to go. Shoot, that might even be 160. I hope it's not 160. Is this, so see this broken support over here? Yeah, 150s. Once it's over this area, that whole long-term kind of like, price action is probably going to be like this. But this here, after a little breach like that, literally that is going to be, all right, we can actually add into strength, go longer as we go up into strength. But the process of bottoming is a process, it's not an event. So that's where we are on Zscaler. Grab out, dude, this going full blown grab. Let's see. Nope, not yet. Hold tight. This one, yeah. If you need the money, not the one. Again, bearish market, down market in general, I expect support to break. I don't expect support to hold, which means wait. And this even like a counter trend bounce, if we get it, again, it'll show up mid-month, next month. 488 is big time overhead resistance. This is support. There's no question here around 3.25. But just like this is like a bottoming formation, if I were to just take this, the top of this bowl is like right over here. It's not ready for sure until it's over 410. And that's when you, from a trading perspective, that's when you can press the gas, momentum wise. So ideally a bottoming formation begins to show up, but it could still go down to 330s, 3.25 on grab. ELF, again, Nike is reporting this chart looks like doo-doo caca. I just don't want to touch this with a 10-foot pole. Yes, it's support, but again, I don't expect support to hold in these type of markets. Even if we get these big bounces, this is support. Even if we get these big bounces, it's all suspect. So that's where I'm at. This is support. There's a let me just check this. Nope. There's a daily gap, like there's an intraday gap, but it's not a real gap because there was definite trading here, which is down to 55. I don't expect this to hold. And I'm not going to go long until I see, like, again, this kind of formation show up at the lows. We're just kind of knifing into it right now. So best case scenario is you get this. If you start to see higher intraday lows, because premiums on options are so elevated right now, I think the first move to do once we start seeing higher lows is to sell some put premium, but not until then. Bloom, I like energy, but I know, it's umbrella. You guys start to see this recurring. Umbrella. So 128 was actually the pivot. I put this on the last one. I think ours, 128, quick reaction down to 115. This trade, if you're in it, is pretty much completed. You still have a 200-day here. If you're long Bloom, your umbrella pattern takes you to 112.5, 112.50. That's where that short ends for now. 112.50. 112 and a third right there. If that 112 level gets lost, it's not done. If this, then that. If below 112, then you're going to lose the 200-day simple moving average over here. But if, let's say you get something like this, and you breach, and then you reclaim 115, then actually back up to retest broken support, at which point I would expect resistance to hold, and you probably end up rolling again. And best case scenarios, you chop inside this box between 128 and 112, which is a tradable range, but maybe not only for, it's tradable if you're an equity trader, not an options trader, because the option bid-ask spreads are too wide. But from here right now on Bloom, I would expect that you see the downside candle start to slow down a little bit. Netflix is going to be relatively strong in this market. It's going to be a safety stock. I don't know that I don't know. Relatively strong doesn't mean up, but I think you're okay. This is probably a hideout place. I just don't know if it's going to give you a lot of upside. The upside here is to 113, where prior resistance or prior support is, that is now faded. You have a smaller level at 104. There's a trading range here, 104 to 113, but we're not even close to that. If you like it, cool. Support, I think I said this last week, again, still in that sub 90 down to 85 level. I'm sure a lot of other people had this. Tesla, I already put this out there. This is like the upside trade was done for me a while ago. We know 115 here, 415, sorry, is like the big, it's the big number. For now, we are in an active breakdown to roughly 350, which, by the way, we've really hit. What I'll do here, the thing about this is if we get to these areas, net, like a typical from 2024? I got to go from here. A typical from the lows, this is 2023 lows, yeah, to this high is going to be about 300. I have a couple different what we call like moves or impulses on this chart, and I'll give you the two of them. So that's the big one. 300, yeah, I think that would be the annual floor, this year's floor for roughly, I hope so, 300 to 250. Let's be safe. Right now, where we are is that from March 2025 low to December, so from last year's low to high, we are literally right here, right now at the 50% mark right now. This is a pivot. If we go any lower, and we've essentially filled this breakdown here, and we rush in these low volume pockets. These low volume pockets create very quick trades just like that. We know that resistance is holding. That was right here. So this was that breakdown of support. This is clearly resistance. We saw it right here. Back to the lows, 350. If 356.72 does not hold, the number is 315. Just how it is. And that's the low, because you're in another low end of this trap zone. And this is a high traffic area, meaning like Tesla has spent a lot of time just recently, 125 days in this area between 356 and 315. If we lose this now, especially on probably something like deliveries, we will see this 315. When we get there, I'm still going to be looking. I mean, I'm a natural bull. I'd be looking for that basing formation to show up, but I need protection right now in case that happens on deliveries. If it doesn't, great. I'm actually still long the stock, but I'm hedged. And if it doesn't break down, this is near-term support, but this is still overhead resistance. As we're in here, there will be tradable moves up over 323 to 356, like on a very regular basis, but I still will expect that to end up acting as support. And we could see this consolidation area, which in the future, if this is the bear case for Tesla right here, right now, that means that I'm going to still need a lot of time to wait this out for my little bull to show up, which won't show up till 356 from a trading perspective. But that's where we are right now. I don't want this level to be lost on Tessie. If it does, it's probably not going to be fun. You got another $50, $40 or so to test the next level, the bottom end of support, which does really set up for that 300 level, like legit pivot. Like bottom floor, 240 is like the absolute worst case. I don't see that happening, but that's absolute worst case. But right here, right now, cautious. If support breaks, it breaks. But now you know where it should go to. Again, just because it gets there, if it gets there, doesn't mean I'm going to pick this up. Not in this scenario. I'm going to wait for this to bottom out. This looks like it's breaching as I'm talking. Wow. Look at that. Is it literally as I'm talking? They're holding it. So maybe short term if I get a little bull. But that is what I'm saying. Like, I don't expect it. I just know where we are. Lava rocket. I'm sure. So these are pretty popular. Again, this is actually the support, but no, I'm not going to jump into this. Oh, never mind. It broke. 61 was support. Mark is not liking Space Crew. Hang on. Space Mob. No, that's a big break. That's actually a major break. So this would have to get over 61. And if it cannot, it's technical trouble. Is my neutron ride over? Come on. Okay. Technical trouble 2. This was important. 51, potentially down to the 40s again. So this is your technical floor, which should be the floor for the year, technically. It's not bad. First spot is, so if you can't get over 60, it's 51.50. Right. Can't get over 60, it's 51.50. And then if you lose 51.50, it's in the low 40s, as close to 40 as you can. But again, I really couldn't stress that enough. I'm not trying to buy at support anymore. I'm more like, what I am doing is I'm waiting for resistance to turn into support. Okay, so let's not do any of these crazy ones anymore. I know you said Nebius. It's just it didn't hold. I'm trying to scroll up. Okay, do it again. Let me catch up on the chat. I see gold. I'm going to skip all the way down. Put another one in here now, and I'll keep going, but that one took us a while. But it was a decent list. So gold here, this is the general support area. I actually don't think that gold has to break down. You needed to get back over 420 though, that's for sure. I take that back. So this was the last low. This was the last high. It's here. I think this is more set up for selling upside calls and downside puts, but you could probably go pretty wide. Usually gold, I use something called GVZ, which is it's a volatility tracker of gold. This is not breaking down. The way this works is that GVZ actually goes up when gold goes up. And this is holding. It looks like it might try to go up again. So unless this breaks down, I'm not seeing it happen right now. So gold probably is ideal for some kind of iron condor situation. We'll see. But it's not going to play a good hedge. I mean, from here, not new money. All right, Circle. I'm currently short. And I'm not taking that off. The issue is here, like literally here on this breakdown at 120. So Circle, I've posted about this a couple of times. Check my feed. Make sure you have notifications on. If you want a fundamental take. But the truth is that this move here, like 30% after earnings, I think it was from 80 to 130, was on the Clarity Act, like being very near to coming to fruition. And then this breakdown here is because the Clarity Act specifically took out the staking, the yield part for Circle, which was kind of like the whole thesis. It's like they own a lot of US dollars that back USDC, the token, and then the yield, it's a treasury. So the yield on that, half of it would get split between Circle and Coinbase. But if the Clarity Act disallows the yield to be income or whatever, disallows the yield, they can't use that anymore. And there's no more real incentive to hold USDC as just a holding in general. You'd probably just own either Bitcoin if you want to keep your money in the cryptoverse, or you would just hold dollars. So that run up should get taken back just based on that. This whole thing should come back based on that. And we have a little bit of a session gap way down towards the lows. And there's bull cases about microtransactions, agentic, like AI stuff as you build with Circle being, with USDC being used to pay for API calls. To me, if you're in that camp, you are literally saying that crypto is going to displace the dollar and that we're at a point where we will freely let our agents, our AI agents, spend my money in general. And I honestly just don't think that we're there. So for those reasons, that's where I'm at. But downside is there's not really a floor on this. In my mind, you should see that 80 and then it's TBD. Iren. Yeah. Downside. That's what. So in our group, I was like, we got to wait till it's over 45 before you think that it can go back up to 53. This is exactly why we wait. not ready, breaking down into 30. Again, I do not expect support to hold. This is support on Iren, but I do not expect it to hold. And if this falls, it's 18. See what they're doing with Nebius, right? It's like all of it, all the way back down. I mean, any short calls on Nebius would have been freaking amazing, right? Even if you sold them here and you just sat on your hands like, dude, you're sitting pretty, happy as a clam. This is a bull and we got a little breakout. But the problem is that this whole thing didn't break through 130 upside support. It's still in the box. So at least back to the bottom of the box. If the market, the thing is that the deal on, here's a story. The deal on Nebius was that the last deal came from who? Meta. And what's happening to Meta stock right now? This is exactly what I'm saying. Like if the market decides to question these like cloud scale, massive data center build outs, real potential, like is that actually still going to happen? This should come back. If the market is legitimately questioning the fact that Meta is going to do their $27 billion still with Nebius after having these legal issues, then you would think that that whole pump should get taken back. And that's exactly what happened. And the problem is that because I see this happening, what's to stop them from saying, oh, maybe the Microsoft one's not going to happen, or maybe this Google one's not going to. I don't know if it's true, but that's what the market is saying right now. So before last month, when the data center spend was not in question, now it is in question, and that's a problem. And this is what we're seeing. CoreWeave probably not going to hold. So I think the downside on CoreWeave, again, but whether it's right or not doesn't matter. It's just that the market is currently questioning it. It's infuriating because it just sounds dumb. Like I'm sure that Meta had enough money put off to the side that they're going to be fine. But the market decides they want to have a hissy fit. And this is what's happening. So we hit the upside resistance. Just do not try to catch this knife. Take measures if you want to. But 64.50 is a pivot. If you lose that, it's going to get cut in half again. Is if this, then that. We're not there yet. It's going to try to test this support level. It's below its resistance. And so this overhead resistance here, well, the support is already breaking. I want to say this right here, which was support. This is so frustrating. I'm getting kind of mad that these charts can't look any better. Like what the, sorry guys. It's so lame. This was support, 85. It ends up being resistance in the future. That's what I don't want to see. And this is what I'm saying. Like until I see, like I would have needed to see this thing happen. Maybe this holds. And eventually if this actually goes, cool. That's how we'll see like a bearish to bullish reversal happen. But like, yeah, it's not looking great. But this is the market now questioning this data center stuff. I know what VCX is. Which, dude, what are we doing? This is going to zero. Are there puts on this yet? I know what this is. So this is that fund that the bigger issue is like, is SpaceX and Anthropic and all of the above, are those going to be like the most obvious shorts when they go public? It's going to be such a hard, because they're going to be coming out these crazy valuations. SLNH, I don't know this one. Yeah. Again, I can't even look at this one like legally. 60 million, 45 is penny stock. We would do this penny stock stuff on a daily chart. You're going to support. But because of where we are, regardless of the technology or how good it is, whatever the story is, if the market doesn't care, it's going to be, they're all going to be troubled. Let's say support on something like this holds. They're going to be good stories in a down market, which are rough, right? VG, NextDecade, these are areas that are relatively strong because of what we're talking about. This is nat gas, but at overhead resistance. So here you have upside targets acquired. I'm going to need to see this really trend over 20. 1780 is my line. So I think that this at best has to go into a holding pattern. And best case scenario is that the rest of this bull kind of forms, right? Which means that you could, if this is good, like this, but I think that this means that this has to hold for a while, and you can get pullbacks down to 14, 1250, as long as it's holding this 1260 area, this prior support. This is a bearish to bullish. It was clearly bearish. It was bearish to bullish reversal, but you're at resistance. So again, in this market, regardless of your story, I still expect resistance to be resistance, and I expect resistance to hold until proven otherwise. So what does proven otherwise mean here? So I have two levels on VG. Proven otherwise means that it's through 1950. So if you get through 1950 and you come back and you dip into about 1850 and I see this, dude, then that's happening. But for right here, right now, I don't want to take these breakout trades. Very cautious of any breakout, regardless. But in my group, I was like, sell these leap calls. You could sell, if your target is 25 on VG here, you could sell some $25 calls for like out to 2028, collect $5 and also protect your, I think it's $5 last time I checked. And then also protect, guess what? $5 of downside to support while getting paid to wait. I love that kind of stuff. What is the best? I mean, I kind of went through like what you're looking for is you want to look at like who hasn't broke down yet and about to. This was the one I just looked at right here, right now, today. I think this is just clearly, this one doesn't make sense to me. As much as I've been at IWM fam coming off the lows here, first of all, upside targets are acquired. This entire setup long-term, this is a weekly chart, is going to set up to be a fake breakout like this. And like, this could be a 180 this year. Just saying. So something like this that's at the highs that doesn't have a thematic reason to be there, especially if all of a sudden the market, regardless of your opinion or not, if the market, if you want to hedge, these are going to be your best hedges. This now, let me here to here. Yeah, you're going to have a broadening. You're definitely going to have a broadening formation on this stuff. So these will be your best hedges. It could breach one. Geez. I think that's TZA. IBM round 2. Dude, if I told you round 1 was technically not over, I mean, yeah, sure. But yeah, round 2. Have at it. This one is also, so when you get a big move like this, even if, like I like Meta, my concern would be like, you get a big move. IBM had a flush moment. You could see that in the chart. Like this is a flush, just actively selling for a while. Sellers. And that's capitulation lows. So we're here towards the lows. Some buyers, but they're now less excited on this chart. These buyers are not continuing to buy. And it's very likely just the market environment. This gets below 2. I had much lower levels near term, sub 200. And so now if I look back on this chart, prior support was here. This doesn't hold. I expect it to fail. This is what we call as support. Resistance. This was prior resistance here. As we got through, this was resistance, ends up breaking out, ends up being support in October of last year, breakdown. You just tap the low of that resistance here at 286. Yeah, I don't expect this to hold. Not if the market's still on its trip. It's whatever. It is what it is. And so that becomes, see, here's my bullish bull. I have to go here. Low to high. There's my 200 right there, down to 175s. But that's what it is. You retest 200 as the prior all-time high. This makes a lot of sense technically speaking. When you look at this and you're like, okay, but long term, it's not that bad, right? But when you just don't, we're just so used to stocks just always going up. We haven't seen a real pullback in a while. It is what it is. So the real support is down in here. But again, even if we get there, it's definitely not here. Even if we get there, I'd need to see some kind of basing formation set up there before we can get out. SoXL is a short. I'm actively short semis. And it's just beginning. It literally is just beginning. So again, also if you own a lot of NVIDIA, something like that's not bad. Check this out. Protection on NVIDIA, it should be really cheap. You're coming in at 160 right now, but NVIDIA's been sideways for almost 9 months, and it's still technically in the box, right? So here, if this breaks down below 164, it's 149. It's 150. This is support. Here. Buying a protection down to there before this move really happens. I mean, yeah, I know it's down a couple in the last few days, but if it gets lower than 164, it's going to accelerate even faster, is what I'm saying. You might get a little bit of a bounce, any kind of a bounce here. If you get this bounce and you get this bounce up to 175 and it doesn't break back out, that's for sure when I would do it. And options would be very cheap. This was support, right? This whole area at 170 to 1, that was this morning's high. There was support right here, 169. Up in here, there were buyers. You just broke that support. Your low end of support is 164.35. I think if we get this counter trend rally, it's into this area here up to 176 that I would say that's a point at which you could probably get very cheap protection for NVIDIA for this. I think I remember looking at NVIDIA when it was trading over here, and my buddy Amit asked me what would I do if I was worried about it. I think at the time I said there was these 140 or 150 calls. At the time they were in November that you could sell, and I think you could have got $40 or $50 for them, and that was going to protect all the way down here. But so far, 2026 is setting up to be the year of aggressive call selling. I think we know the story here. Broadcom, active breakdown is an active break. This is 230s. That was an active breakdown. Dude, this is so irritating. Nobody's asked me about AMD yet. You want to see it? This Broadcom chart. So the Nebius chart I was worried about it. I was worried about the market questioning the data center spend. That's been the last light I'm holding on to, that the market at least wasn't questioning this data center spend. Now with the Meta and the Google stuff happening, I'm like, well, okay, I could see the market start to question it now. looking at specifically Nebius, that is just obviously the market no longer giving credit for the data center build, which I think is dumb. But I'm on a big rant. I'm sorry, guys. Which I think is dumb. But the market can stay irrational longer than we can stay liquid. And I just don't want to get caught at the top with no cash to buy the lows. And this will not be the lows. This will just be the beginning of a breakdown if that happens. PGY. This one's just a no. This one's just a no. Stay like it's not, the chart's not ready. Again, you can have a good thesis for it. But again, if semis are just now breaking down, I think this is semi. AI networks. It's the story I just said. All of a sudden, post this ruling, Meta, Google, the market looks around at Microsoft much lower. Amazon hasn't broken down yet. The storyline on Amazon, it's about to. It might. Is that it's very consumer driven. But again, if the market wants to be dumb, it's immediately going to go into a weak consumer story. This is now looking very bearish. It's going to go into like, oh, well, sure, we'll question the data center spend, and then we'll question that not only because of some legal ruling, but also because the inflation's too high and the consumer is now weak, which we have retail sales coming in. That's what could happen. So it's holding its uptrend right now, which is what I mean by it hasn't broken down yet. But I don't expect it to hold. Like I don't expect this to hold in this environment. This one actively hedged as well. 188, I think, is upside, is near-term support from here. Prior breakout, 2021 all-time highs, 2024 and 2025 lows. But if you lose that 188 is I can wait. And so if we see capitulation lows for whatever reason, and I see like Amazon at 150, that's where capitulation lows would be. And if you've never like lived through a market like this, it's a good experience, but I've seen this happen and I hate it. It's so irritating. But it is what it is. Good news. If I get this low, I have a 100% probability of being up like 50% next year. So we're good on that. Yeah. SoFi, I don't know, the short reports, whatever. This one's just no. Also, big umbrella. This is my hoodie. I'm scared to look at my hoodie, but I've been saying 14. That's your point of control. That's the spot right here, 1398. But again, I need to see that little bull form up because in this type of market environment, I expect these to break. It's just how it works. And then you have to take this one from the low lows, which is how I have to do hood now. Also, sucks. At least I have confluence here from the absolute lows. This is sitting at $14. So 15 to 14 near-term support, like the current support, that is support. But if 14 breaks, there's not really a floor until there's just not really a floor. And what I have to do is I just have to wait. I don't know. I could give you a number. You guys can see the number on the screen. It doesn't really even need to be said, but that's where the next level of support is. Is it dumb? That'll be fucking wild. But my God, if I got that price again, I would probably buy the crap out of it. So I'm not going to get that price again. That would be so stupid. That'd be so stupid. But who knows? This is support. And then we'll have earnings coming early next month. So this is major support 14 on SoFi. Hopefully it holds. I'm not going to jump in, but if I see that kind of like rounding bottom, like I've been talking about, that's best case scenario. And it'll be when it's coming up over 15, I can expect to bounce up to 18 and a half. And then if I get that bull to continue, that's your long, all else being equal. But we'll have to see. Mobileye, what are we doing here? We're not doing Mobileye. EEM. Fear and greed. Dude, just give me the 628 on SPY. EEM. So emerging markets are different than US. Unfortunately, these are pretty hot. I like this sentiment, but I think Japan is I don't know what the mix is on Japan here. This one is a little, yeah, also you got to wait to see. This is near-term support 52s. Hang tight. Watch for that little bear, like the basing thing. I think I did name Nebius. Let me scroll down to the bottoms. Kratos. Yeah, because it tends to be a sell the news event. Oh yeah, this is, dude. What do they do? What? I mean, it was a nice run. It was a good run. Did they lose a contract? That's capitulation. Okay, so that's capitulation. 52.90 is the low. I have this. You lose 71, you're going to the low 50s, possibly 40s, 46.24. I don't even have a spot on that. Dude, that's dangerous. That's a sketchy chart. No. This thing's got to get back over 70 to have any life. But you can watch it and wait. That's what I'm saying. Way too much. AMD is the one I didn't do. We did do Micron. So also active short, just so you know. I was totally open to the idea of another counter trend bounce. This is my notes. This is our private notes to my group. So if you're in my group, you guys have seen this before. I actually took this at the close of yesterday. There was a bounce. This is what I'm saying. So 209 up to 213 would have been a typical counter trend bounce that I could totally see happening in a normal, at least not bearish market. The thing doesn't even make it there. Like it doesn't even get to where resistance would. I need to shut up. It didn't even make it to where it should have made it. It was like insta sell off, 208. I probably could. I wasn't even looking. Anyways, I probably need to move my stop loss. So I'm short this name right now, but just so you know, for people that are long, think about this from my perspective because I'm telling you right now, I'm in an active short. What I will do as someone who is short is that I will now not lose money on this trade. So I will make it so that I cannot lose money on this trade, which means that if I entered here, we're up here, might have been my prior stop loss. If it's over 201.90, I'm going to close out my current short on AMD, which means that if AMD starts to trade over 201.90, call it 202, you probably have a pretty good potential of a short squeeze, at least back to this counter trend area, which I thought could happen. So read it that way, is that I'm just trading, but someone who is short on AMD will cover their shorts over 202. As long as it's below that, I'm not covering a short. And so you should also understand that as long as it's below that, it's probably still going to grind down. So as someone who has a lot of shorts on, I'm not even going to cover really around 187. I will cover, meaning I will go long I will take some of my shorts off, which is effectively the same thing as buying, but not a lot of them. And it's only for this type of thing. If I get this again, I'm still going to be short while this. I'm just taking what we call a trim. So just know, like, even if this does this, it's not. This is going to be a counter trend rally. Even this would be a counter trend rally, and the higher that it goes after that, I might get shorter because I already took a little bit of a trim. So just be cautious. Just know, like, there are all kinds of market participants out there. It's not that I don't like the stock; it's that I don't like the market. I don't like what the market's saying right now. It's so dumb, but it is what it is. And this one is one where, like, I zoom out. Same thing. We have a bit of a double top here. That area that I was talking about, you can probably see it a little bit better now, which is from here really to here. This was the overhead supply. And prior support. So where this was prior support in the past, here, 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 even to some extent here, right? We already started to see some sellers, early sellers, step in here, and what we saw over here was, like, we call this like a sign of weakness, right? A little lower selling. They're losing some faith. We got that news flow on AMD as big pops, but that when I saw this one, I was like, I don't believe it. First of all, 227 is the prior high from over here. So it has to be over 227. I don't know why that's... Anyways, it had to be over 227. So this is now taking off all of these lines and even taking off the SMAs, simple moving averages. Like, we can kind of just see, like, from this box here, that was that prior consolidation. You have equal lows. You see it now. This is just another, unfortunately, short spot. Even here, you can see it. And now as we go down, regardless of your 20 to 200-day SMA, I mean, I have a broken uptrend. It just kind of is what it is. I don't like it. I don't like I don't like being short, but you gotta do what you gotta do. It's unfortunate, man. Bleh. TSEM. Can you do next? I mean, I like next. It's the whole storyline. I mean, these are relatively strong. Here's the other truth of this is that every bear market that I've traded through, and my group knows this about me, and I've been saying it so often, like over and over, is that I've always been able to find relative strength like this. Also, like Oxy, I'm long Oxy. Like, I've always been able to find relative strength like this. But even if these trades are going to be great trades, the other truth is that looking back, and I mean, you can do the same. Just think back to, if you've just, maybe you go back. Looking back, finding relative strength it wasn't enough. Relative strength is great. It is really great for when we get out of the bottom, like when we start going back up. Those are the ones that are relatively strong now. If they pull back and we've bottomed and we start going back up again, those are the ones that are probably going to do best later on. Right now, I can say it's probably semis, it's probably energy, and if those all come down, those are probably the ones that are going to have the best rebound later on. But until then, they have to pull back first. So anyways, next decade, when I took this trade around $6, I was like, this is going to 850. And I posted on my timeline on X, 850 target acquired. So for right now, that's the first target acquired. If it's over 850 in strength, then I have this up to 962. But that's my stretch goal, 962 on NextDecade. I had 660 that this could come back down to, which it did here, 660 right in here. And then it instantly went back up again. So it's not going to be that low. If this trend holds, then I expect each one of these moves to hold as well, which means that here I expect 735 to hold as the next level of support. And if that does this, I expect the next move. We might take a couple shots, but eventually, over time, if this trend stays, that right there is exactly what I expect. So that's NextDecade. Dell, dude. So Dell, I'm scared. So Dell was at the very highs, very tippy. Yeah, it's a short. It was a short at the highs, at resistance. Dell, if Dell loses this 160 area right here, it's a big short. So like if you think about what I'm upset that I'm seeing this like over and over. If Nebius is going to take it all back after like a $27 million, whatever, $billion announcement that Meta is going to spend with them, they're just going to question all the data center spend all of a sudden, which is not what they've been doing. So like I have to look at my corning. There it is. This was what I was not wanting to see, and now I'm seeing it. So like I have to come to terms with the reality that my corning's probably going to break down. Like it's probably going to break down. It's probably going to come back to reality. Not reality, but I mean, for sure, I know it's expensive here. This is the box. And we're going to test the lows. And I just don't, if they're going to question all of it, what's AAOI doing? They're questioning all of it. So like, that's lame. But here now, this is not going to be support. These need to get like capitulated to the lows because the short just started today. Like it just started. Or really Friday, which is lame. So if these come down and then let's say we get a counter trend bounce across the board, that's the thumbnail. That's the concern. Like, really? Okay. And this is so I had an alert go off. Someone asked about this. Devin. Dude, look at all this freaking Credo. So Credo, I think this was someone's request. Same thing. Like this is just getting worse. But this is what I can say. Trying to snipe these lows in a situation like this is not going to be fun. I will see them turn around, but it's too early for them to turn around in this game, like in this phase. This is going from like phase one, hold support, or like, so stocks run, right? Then they rest, and then they run. It literally just started 125. It just started. Best case scenario, which means that best case scenario, if they're going to be done running, that means that they need to rest. So run, rest, or run, rest, run. I need to look for a rest before another run can happen. So that's where I'm at. I'm not trying to snipe lows. I'm going to wait for the rest. And if I can get a clean trigger out of the rest period, that's to the upside, I'll go long. But it's also very possible that it's more downside. But they haven't even started to rest yet. They should have, could have, but they're not. And that's irritating. So I'm going to call it there. It's almost the power hour. We're closing on the lows. Ish. Look, tomorrow's the first day of the month. This is not normal to close on the absolute lows. It's just not normal. It's not normal to close on the absolute lows of a quarter But it doesn't mean it doesn't happen. Looks like they're going to try to make it happen. We have about an hour for it to not happen. So we'll see. And that's what we are. That's where we're at. That is where we're at. This is pre-market. We're down. If this is not over 633.13 in the next 30 minutes, it's just not happening. And we should see that 628 or whatever it was. It was 628. $628.20. Probably tomorrow. At which point, there's no way that I'm pressing a short tomorrow on spot. If we open at 628.20 tomorrow, I don't know. I'm just going to take some shorts off, some protection off, and I'll watch, and I'll be kind of neutral. And ideally, I see a little base, but this 633 is going to be a pivot, and I know where we go from there. But anyways, that's. I wish I had. I guess there's some good news. Good news, as in like we're really close to like my general floor. March 31st says 31 days. Dude, why you got to do me like that? All right. March 31st has 31 days. You're not wrong. So maybe we open here tomorrow morning, which sets us up for the rally. I'm game for that. I'm game for that. But until I have that, I'm just going to stay protected. He goes, oops, Wednesday. Yeah, I'm sorry. Like, good news is there's still time to do some hedging, generally speaking. Anyways. Yeah. What I need to see, so it's 628.20. And it can go down to 626. I would be looking at that point to sell some 620, 610 put credit spreads. That's what I would probably be doing out of the gate. I'm going to be cautious. I thought I would be doing that today, but I'm not because I'm watching this happen. And if I don't get a reason to do it, I won't do it. But I'm also currently short 670 and 680 call credit spreads. These are for May expiration. I collected, it's $5 wide on that upside call credit spread, or $10 wide on the upside call credit spread. I collected $5 to do that. Like, I should be able to do a 620, 610 put credit spread for the same expiration around this level and collect another $5+, which gives me a zero probability of losing on that trade and a massive range to make money on. But if I don't have a reason to do it, I'm not going to do it. So I have to wait for that. Yeah, it saves money. There's a lot of new traders that have not experienced a bear market. I've experienced multiple of them. Unfortunately, it is what it is. This one is setting up to remind me. They're never the same. I will say all of them you saw it in the charts before. We saw this one in the charts before. And there was some kind of random catalyst, black swan event, whether it's tariffs or COVID, that the market wasn't anticipating. And we were always coming off of like record years and amazing high expectations. So because of that, like we were coming off of very good year, coming into 2026 with a lot of expectations that things would be the same. And then slowly, those expectations started to shift. And then in the middle of all that, we have a black swan event of a geopolitical crisis that nobody saw coming. That's how it sets it up. It is what it is. But I don't even know that it's 20. The problem is, like, I could give you guys a level of where I think that SPY is going to go. And I've been hesitant to say I can give you a level across the board, but I'm now being more cautious to tell you that, and being more explicit telling you that it could go further. And it's just because I have a level, what I'm going to start watching for is that basing formation, because basing is healthy, but it's a process. It's not an event. If we get any kind of V recovery at any point, it's sus. Like, it's suspect and it's to be sold into. Like, that is the problem. And so, like, that is the issue. The only thing I want to see is a slow and steady basing process. So, yeah, they tend to be quicker, but bear markets also have these crazy amounts of bouts of counter trend bounces that are traps. And so we just started. If we get a trap early, it's like, that's what would suck. But the best news of the day and the good news of the day is that in a midterm election year, if you buy the lows, you have a 100% probability of being big green 1 year forward. That's good news. And that holds true regardless. It's just a question of, do you need to force it right now? Which I don't think you do, but it's teeing up to be one of the most epic dip buys. And I think it would make Liberation Day was laughable when they said it was a generational dip buy to me. Like, no. That's not happening. That's not what that is. This one should be an actual good one. But anyways, I love you all. On to the next. Peace. Bye.